What are you seeing now? Does this confirm what you thought? And do you see any sign where you say, okay, maybe things are getting better and I need to revisit that rating?
No, so my rating was primarily due to the crackdown and sort of the sort of hostile environment for software-based businesses in China right now, and what I call the potential of what I call the winnie-take-all scenario for Baba, and Baidu, BIDU shareholders in the States primarily. Because of the conflict between, this whole idea the SEC has to execute mandatory audits of reviews of the auditing firm. And China has said and Xi Jinping has said that is a violation of China's sovereignty, which is a real hot button word there. And so I don't really see a compromise. And so they actually might get delisted, one, or Xi Jinping maybe pulls some sort of move where he, disavows the equity claims of Baba and Baidu shareholders, because technically it is illegal by Chinese law for foreigners to own equity stakes in internet companies, in domestic internet companies. So that part, so if the vehicle is at risk, right? Then hopefully maybe at least the stock is doing, the company fundamentals are doing well. And no, this quarter showed it, right?
Well, you have two. Hold on, because there's a lot going on here. You're given two different things. By the way, they're related, but I want to be clear for our audience. Okay, you've got the core business stuff, maybe lockdowns or whatever you think about it with Alibaba, but then the other side you're saying is a little more interesting. That is we'll call it the Xi put, right? Because the government of China has been doing some stuff, human rights and everything else, but with corporations. I mean, Jack Ma founded this company, built it, and suddenly just said, I'm going to quit, and then basically vanishes for months. Yeah. I mean, with any company in China, not just Alibaba, you are facing this kind of overnight headline risk out of the blue. Yeah. You don't know who they're going to go after.
Exactly. That's exactly right. And it all started, of course, with Jack Ma's speech criticizing the financial system in China, the financial regulation in China, because he said it impeded fintech innovation. Well, Xi Jinping didn't like to hear that. And that's what really caused him to cancel the Ant IPO, which would have enriched Alibaba shareholders, because Ant is 30% owned by Alibaba, right? And and then but it was a couple of weeks before they started to use the lingo of big tech regulation, because they want to mask what they are really doing is, consolidating power. And Xi Jinping was threatened by Jack Ma, right? And in a totalitarian situation, that feeds on itself, right? And you get the leader becoming increasingly, fearful or paranoid or whatever of the other people, that have power, particularly those that are, kind of outside the central committee, outside the central core of the Chinese Communist Party. So
John, my pushback, I guess, to you is isn't this all already known and out there and reflected in a lot of these valuations of Chinese internet stocks? Not just the regulatory crackdown, but the slowing of the Chinese economy. Bank of America fund manager survey showed shorting Chinese stocks and Chinese internet in particular is one of the most crowded trades.
Well, there's a reason for that. I mean, obviously there's
I'm just wondering if it's already in the price.
Bifurcated opinions, right? So, right. So that there's always a market somewhere. But I mean, my target is low. It was $118 right now. And I think it does have further to fall, because I don't think people fully appreciate what happens to a software-based business in this kind of environment when you take away all of its ability to or at least suppress its ability to innovate. And you see it in the numbers. Okay, the 31% growth in domestic China commerce, right, which was a slowdown. I didn't think that number was too bad, but it's not even that. If it's organic and you disclude the Sun Art acquisition, the organic growth in China commerce was only 14% year over year. That's lower than it was during the pandemic, year over year. Like the height of the pandemic, when they felt a 22% growth last year. So there's a lot going on here, and you can see their sales and marketing as the percentage of revenue went from 9% to 13%, which means they're fighting JD and the rest of them to keep their market share, because it's pretty clear that the only thing that has changed in the last year is this government crackdown, and it's pretty clear that they're putting the Chinese Communist Party, the CCP, is putting its thumb on the scales of competition, And, you know, it's a punishment. There's no other way to look at it, I think.